let's imagine that we have a customer of a brokerage firm that wants to buy some shares from the IBM. Let's say that, for instance, that bank or that institution wants to buy 100 shares of IBM. This customer will place the order to his broker, and this broker will apply the law. The law says that he has to buy at the best bid for buying, or has to sell at the best ask for selling. So he will place the first order to the first market. Let's say he plays to the New York Stock Exchange, and there will take all the offer. So let's imagine there he can get only 1,000 shares. All right, at this point, HFT machines, what they will do is to get information that a big customer is willing to buy a big quantity of IBM shares. So before the broker will send the orders to the other markets, what the HFT machine will do is to buy all the available paper in all the markets. So we'll make a frontline strategy. In the queue, will put himself before that customer, and that will increase the share, let's imagine, 1 or 2 ticks. So this customer will pay a little bit more money for the same share. That's how the HFT strategies will work. At this moment, the HFT, to do that, what they will do is to put their computers inside the market. So CME is offering right now what they call co-location. So you can put your computer, your HFT computer, inside the market and beside the CME computer. So you will be able to do all this strategy faster than anyone. So many strategies from the HFT, what they will do is to make a frontline strategy. When they will detect that you will place a big order and want to buy a big amount of shares, they will place their positions before you in the queue. So you will be forced to pay a little bit more. Other strategies that the HFT are doing right now is arbitrage. For instance, they can check that the IBM share is 1 cent expensive in one market than another, so they will buy in one market and sell in the other, and they can do that because of the speed. Other strategy is they will act as market makers, so they will provide liquidity to the market. If they detect someone that want to buy a share from IBM and another that want to buy, so they will provide liquidity in both sizes. So in this sense, HFT strategy will act as a market itself. Finally, I would like to give some of the new strategies that are growing right now. These are talking about the dark pool. Let's imagine that you are a broker, and then you make an agreement with an HFT firm. And then you ask the broker to create a market. Let's say this market, let's call it a dark pool. So, in case you want to buy the 100,000 shares from IBM, you will contact your broker. But in this case, what the broker will do is to place the order to the dark pool, to its market. And due to the agreement that the broker has to the HFT firm, then the broker will provide information about the HFT. So in this case, normally you pay commissions to the market. So the broker should pay a commission to the market. But in this case, it's the HFT that will pay money and will pay the commission to the broker, just to have information in that pool before anyone about the customer that want to buy those 100,000 shares. As soon as the HFT get information on this dark pool, then we'll place the frontline orders to the other markets. Just to show some pictures, this is the CME in Chicago Center, and this is the new CME. This is the building, the new building in the CME, which is in Aurora. There's something I cannot understand. The Chicago Board of Trade has 12,000 square meters, and the new building has 100,000 square meters. The only reason, because we all know that computers are getting smaller every day, the only reason is to allow the co-location. So in this big space, they will allow all the HFT firms to put the computers beside its own computer. So get the information before anyone. But anyway, we cannot change life. But let's see how can we profit about all these practices, and how can we profit and get some successful patterns about the way that the HFT act. Of course, we cannot compete with more speed against the HFT, but we can perform a piggyback strategy looking at their flash orders working. Our task will be to answer for what reason a flash order was placed and which was its purpose.